Well, hello. I am Matthew Coyle. I am a real estate agent at Compass Real Estate, part of Team Coyle, and I'm here with my partner, Ying Coyle.
Hi everyone, good to see you again.
So, how you doing today, Ying?
I'm doing well. How are you doing, Matt?
I am doing fantastic.
Okay, great.
So, today I get to ask you questions, right?
It's your turn, sorry.
No. Okay, I gotta go.
I did last time.
I think I hear someone calling me. So,
Okay, here's question
so
for
hold on,
you.
hold on. Before we go, what are we going to talk about today?
We're going to talk about the real estate marketing update
Okay, the real estate market
Market
update
updates,
in
yeah.
Massachusetts.
in Massachusetts,
Okay,
yes.
all right, okay, fire
And
away.
focus on the Metro West.
Metro West region? Okay, good. And that's like 12 towns,
Yes,
like Wellesley, Natick, Sherborne, Framingham, and then so on.
yeah.
Okay, all right, go ahead.
So, what is your take on the current market?
Well, the current market is still very favorable to sellers. It's certainly a seller's market, and I have data to support that. But as most people know, the real news in the real estate market is interest rates. The Federal Reserve has been very clear that it's going to raise interest rates. They've already done that twice this year, and they're going to do another, I think, 5 or 6 more times to get ahead of inflation, which right now they're behind. Inflation in the economy is at a 40-year high, 8.3%, and the Fed last month decided to up the level of increase in its interest rates from 25 basis points, a quarter of a point increase, to 50 basis points, which is a half a point increase.
That's a federal fund.
Right, and what they target is the short-term rate. They have a key policy rate called the federal funds rate, which they target, and they manipulate that to get rates higher throughout the economy. And obviously that has an impact on mortgage rates. Okay, so
Yeah,
we've
we
seen,
saw mortgage rates from 3 jumped to 5 right now.
yeah, they're like 5.25, 5.5 range.
Yeah,
So
for 30 years fixed.
for a 30-year fix. Thank
Yeah,
you, thank
it's
you.
it's past the 4s, so.
So needless to say that refinance activity for the mortgage lenders has gone to virtually zero, because most people, when they have mortgage interest rates below 4%, so
Yeah, that's true.
or below 5%, should I say?
Right. So what about the home price? What is your outlook on the home price?
Well, home prices are very good. Let me give you some data here. Um, so the median sold price for the Metro West region, and this is for the month of April, was up 22.8% year over year. That's still a pretty substantial increase, and that's pretty consistent with prior months. And we would expect that trend to continue, given that throughout the year, maybe not as robust as it is in this particular month, but it will be what I would say increasing at a decreasing rate, because we have one issue that we wrote about in our monthly newsletter, and this came out in April. So this outlook that I'm talking about is in April/May. We don't have any hard data for May yet, but basically in this newsletter that we published for Wellesley, the town of Wellesley, the article affordability, the one issue that will derail home price growth. The issue is that first-time home buyers in particular are being priced out of the market. They just can't afford the current current values of houses, as well as the higher interest rates.
Yeah, remember we have a buyer who target price was 800, and after the rates keep increasing, they decide to have to rent a house
Right, because
instead for a while.
Because what their ability to afford went down, because when they went to the mortgage lender, rates, instead of being at say 3.5%, are now 5% borrowing
Yeah.
rate. So, the amount they could borrow was much less, given their income levels and what they had in cash reserves. So that's causing a big change in the market. Um, that said, inventories at levels are still low, and there is a big imbalance between supply of houses and demand. Demand certainly outweighs supply still. And
Which is a big factor that decided the home price.
right. So for April, to give you an example, in Metro West region, the month supply of inventory, it's a statistic we look at in the real estate industry,
Right.
was 1.3 months, which means that it'll take 1.3 months to sell out the
everything,
inventory,
yeah.
given the current demand. And typically, anything below 5 months is considered a seller's market. We're at 1. And we've been pretty much at 1 for the probably last 2 years. Between 1 and 2, should I say. That's probably a better way to put it.
Right.
So-
Yeah, it's
so-
very low.
I don't see this market changing too much in terms of the imbalance between sellers and how people that want to sell and people want to buy. But I do see demand coming down because of this affordability issue. Supply, I expect to remain constant, maybe some increase because of new houses and maybe people sitting
The
on the fence.
timing, yeah, the spring and summer market definitely generally have
Yeah.
more house come to the market.
See, the problem with this market is a lot of people, and you can speak to this, is a lot of people are thinking about selling. People that you would naturally think would sell would be retirees, empty nesters who want to avoid the higher property taxes of living in a town like Wellesley or Natick or Sherborne, and go somewhere where it's more affordable for them. Plus, you don't need a
Bigger house.
four-bedroom
Yeah, yeah.
house when all your
Yeah.
kids have graduated. It's from
Right.
college and they're working on their own. They have their own homes and own lives. But you know, the problem is they can't find a place to live.
Yeah, they kind of find next house to move to,
Now,
which,
we were in a situation where you had a friend that you used to work with over at EMC, and they were looking for a house. They were looking to sell their house, but they couldn't find a house, so you put them in touch with an agent in Florida.
yeah, they moved to Florida, which is really a nice move.
And that worked out really good for them,
That
right?
worked- Yeah, that's true. But not everybody want to move to Florida. Some people like to stay local still, but if they buy a new house, first is the mortgage rates is going higher.
Right.
Second is there's not so many houses, so they
Yeah,
cannot
but-
make the move.
But the thing that, one advantage we had, and one of the reasons why we chose to work with Compass is because they have a nationwide network of
Yes.
agents. And
We have done a lot of referrals to California, Florida, New York. Yeah,
And it gives people the opportunity to talk to someone who knows the market down there. I don't know Florida, and you know, but I do know people down there that can help them.
right. You
So-
need a local agent.
You need a
yeah.
local agent, exactly.
Yeah.
Okay,
So-
what else you have?
So what type of buyers are being most affected by the rising price, inflation? I think you already answered
Yeah,
that
so
question. First-time
so
home buyers.
obviously the people are getting impacted by the inflation. The rising interest rates are largely the new buyers, first-time buyers. You know, those people have the hardest time getting a house. So.
And I think the next question is really good because we helped a lot of buyers too. What did you say in the offer? I mean, is there any change in the terms, condition, or price? What did you say?
So you're talking about contingencies, right?
Yes.
Okay, so for a better part of a year, we're seeing a lot of offers to buy houses waive the inspection contingency and more recently waiving the mortgage contingency as well,
Yeah.
as
Yeah.
sellers demand
They
more.
try to make their offer stronger, more competitive.
Yeah.
Because everybody does that, right? Everybody else does that.
I mean, the goal is get your offer accepted, and I can't tell you the number of times we've been in helping a buyer make an offer and it gets rejected because they're one of many. When I say many, it could be as much as 10 offers on a
Or
house.
23.
Or 23, yeah, it's a lot. So
It's a lot.
so you need to do everything to to get the seller to choose you, and some people can't. Like first time home buyers have a difficult time waiving that mortgage contingency, and I don't blame them. But
No,
but
inspection as well.
but I think we're starting to see, and real estate is all about location. I think we're starting to see signs where it's starting to loosen up, where you don't always have to waive your inspection or mortgage contingency. It's still very prominent, but I think we're starting to see some situations, some towns where it's not as required. Because the location is not as attractive. The supply demand is more imbalanced than in some other towns.
Right. So what about expect the Federal Reserve to continue increase rates? That's the next question I have for you.
Yeah, so the Federal Reserve was very clear in its guidance that it expects to raise rates at its next 7 meetings. That was not including last month's where they met and raised rates 50 basis points. So I would expect that to continue. And I see no change in that guidance. They had initially said 25 basis points. I think the new level is 50 basis points or a half percentage increase each time they meet. So we should expect another 6 half point increase, 6 more times when they meet, a half a point increase. So what is
Wow.
that? About three percentage points or so?
Something like that. So
Yeah.
you
So
mean
I would say at least because they're behind the curve.
what I heard about interest rate is by end of this year, most people think it will be go to around the 6.
Yeah, I would.
That's 30 years. Yeah.
And here's a factor that you should not underestimate its importance is Jerome Powell, the chairman of the Federal Reserve, recently got his contract confirmed by the Senate for another 4 years. So he's locked in for 4 years. He's already got his money, so to speak. So I think he's willing to be more aggressive than before he had his contract signed.
Yes.
And he needs to be because in order to get ahead of inflation, he's going to have to be aggressive on raising interest rates. If you're a history of economics and you go back to the 1980s when we had comparable inflation around this level, 8.3, 8.5%, the chairman at the time, federal Chairman Volcker, Paul Volcker, his idea was to burn inflation out of the economy. And the way you do that is you raise interest rates above inflation and you burn it out of the economy. So that's what Jerome Powell's going to do as well, in my opinion.
Yeah. Okay. So with that said, we addressed interest rate, inflation. I think that's pretty much what you're talking about. One more last question, right? Oh yeah, people are talking about housing bubbles. Did you really see a housing bubble here?
No, I don't. Not at least for the remainder of this year. I think we will continue to see a market that favors the seller. I do think we are going to see buyers dropping out of the race to buy a house due to affordability issues as interest rates rise and the cost of housing continues to go up. But I do expect the price of houses to still increase, but at a decreasing rate, at a decreasing percentage. And then in the fourth quarter, I think we'll have a better feel about what's going to happen in 2023.
Yeah.
I can't give you any opinion right now, but I still think this year is a good time for sellers. It's going to get, I would think, progressively less good, if I can say it that way, than it has been the first 4 months of the year, 4 or 5 months of the year. But it'll still be a very good market. And
It's a little bit better for a buyer because they have a little bit more balanced power when they get
I could see
offers.
terms and conditions
Right.
starting to,
Yeah.
get back to normal levels where you're not waiving them. It's still going to happen. People are still going to waive inspection and mortgage contingency to get their offers accepted. But I think you're going to start seeing signs, some cases where that doesn't have to happen because the competition for houses is going to decrease.
Right. Okay. So Matt, that's all for today. Thank you very much.
Well, thank
And,
you. I appreciate it.
If people want to get in touch with you, how are they gonna contact you?
Well, they can contact us both because you're going to put a link below.
Yeah, we're gonna put a link below here.
Okay,
Yeah,
you're going to
there
give
you go.
them access to our website, correct?
Yes.
Where we publish our monthly blog or our monthly newsletter. Okay, we also do a newsletter on town rankings for real estate, primarily the Metro West
That's
region.
very good.
Okay, shows how your sales activity of homes in your town compares to other towns. Okay, who's got the hottest town, and certainly if people have questions they want us to address in these videos to answer, we'd love we'd love to
Sure.
accommodate you.
Yeah. Thank you.
And also, we're gonna have an episode on.
Oh yeah, let's do some preview next episode. We're gonna talk about 1031 exchange, which is great tool for investors like Can Exchange. We have invited a 22 years veteran in that field, and she's gonna talk about the main point people need to pay attention, and she will answer some questions. If you have questions, remember to submit here, and we can ask when we do the interview.
Yeah, we might also do an episode on self-directed IRAs, which allow you to invest in non-traditional assets like real estate. And that's kind of an interesting product that I'm currently learning about. And I thought it would be a good idea to kind of share that knowledge and invite somebody who has expertise in that area, not me, but somebody else who we can interview, and hopefully that would be valuable information for you as well.
Yep, thank you. Please subscribe, like, and share with your friend.
Okay, have a great day. Thank you.